All right, hello everyone. So let's do another wrap up for 26th to 30th of Jan. Now, as you know, for the past 2 weeks, I was away on holidays with the school breaks and the kids and family. So I wasn't able to do any case studies for you. But as usual, I have done the videos for those weeks that I was away, except Friday, obviously. But Friday I don't work anyway. So my work hours and days are Monday to Thursday. But normally I do try to do a video on Friday if I can, but I was on the road. So let's take a look. By the way, before we start taking a look, I've already also added the February, the full month of February, the trading days, trading hours are all on there already. And January 26 to 30, I had posted in December. So trading days, gold Wednesday, Friday, euro dollar Wednesday, Bitcoin Thursday, Friday. So both of them are okay. And then we've got Monday, Friday for SP 500 and Dow Jones, and Nasdaq. We've got a Wednesday in between as well. And those are the trading hours. Just a friendly reminder, they're all UTC plus 3. So that's my time zone. And accordingly, those are the hours. My platform is 1 hour behind, so I have to draw the vertical lines accordingly. But that's the Monday hours, Tuesday, Wednesday hours. You can just pause the video, make a note of them, and see how your assets did. Okay, so I'll just take a look at what we normally take a look at. This is gold. So if I do the daily chart. Now with gold, remember, I'm trying to use the trading days, the trading hours, and the pricing together so we can trade to a certain level. And if we're going to enter a trade, we should enter at a certain level. So pricing and timing is important. Now, as you know, the week before last week, we had Monday going all the way into Friday. So that was a beautiful run all the way up there. And we had that target from ages ago. And this week, well, last week, I drew the target for this week where we can get to last week. All right. So I drew that target. We hit that target on that day. That's your Monday. Breaking out, pushing. That's your Wednesday. And that's your Friday. So Wednesday market makes that second target I did. Thursday, dangerous day. And on Friday, though, it sold off right into the zone that I had marked in. So that you can see is 4,600, I think, 92. All right. And on a 15-minute chart, if we take a look, if you sold off on Friday from the highs, okay, Fridays, these are the trading hours. That's your Asia push down. This is London trading hours. Nothing really happened there. I didn't have any hours there. New York, sell off all the way into the target. And then at the right time, market bounces off. So if you traded off this hour as well, like on this bar, you would have been able to scalp it as well. But, you know, like I said, it's a Friday, the last day of the week, so you don't want to be mucking around on the last day of the week. But in any case, you can see also on Thursday how the market traded those hours, right? We're right at the tops over there on a Thursday. Whoops, come back a little bit. We're right there at the top here on a Thursday. And the market at the trading hours in London and New York pre-trade session, as you can see here, it's just pushing to the downside. Also, if you are using technical analysis tools that we learn, or whatever you're using, which is fine as well, as long as you're using technical analysis and money management, what you can do is just match the time and price. So for example, here, you could have easily used Fibonacci, and a lot of people say, oh, Fibonacci doesn't work because there are a few levels there, right? It's not just one level. Yeah, but we do have favorites, right? Our favorite levels. And also we've got time on our side. We're not just trading with a price level, we're trading with time and price. So for example, if you took the Thursday high, let's say that's the impulse, and if you understood that that's it, you know, this is the market where, let's also do this, for example, this was the zone they needed to break, market breaks it, closes below. So now I can say, well, wait a minute, if I do an ABC to the upside from that high, that's your Wednesday high, okay, Thursday high, I'm sorry, not Wednesday, Thursday high. If I do that Fibonacci, then I've got an A, B, C pulling into 37.5, which is, as you know, a favorite of mine. Let's do this. It's 37.5 or 38.2. You can use both, it doesn't matter. And you can see it's done that at the trading hour. And look at the ABC pullback. See how that see how that works out. This is the high. It's pushing into there. Also, another reminder, you can also take the Fibonacci from the impulse down, which is that high there. All right. So if you were to also use that as a level to push to the downside and then wait for an ABC, that's also fine, because what you can do then is also see that this is 25, okay, which is fine, because 25, 37.5, whoops, not that, let's get rid of that. Those levels you can use, all right, and that's your 37, that's your 50. So once you start using these levels, you match it to your hour. That's the important thing, and that's your trading hour there. So the market's already done after the impulse an A, B, C into there, right? That's your high trading zone, and then a push down again at the trading hour. And look where the market stalls. It comes back into a trading hour and stalls in this zone, right? And that's already a trade you could have taken in any case if you're doing day trading. Friday, it's like I said, it's always a tricky day, Friday, because market's closing a little bit more volatile, so you've got to take it easy. But in any case, if you measure the price and match it to time, you should be okay. Even if you get stopped out, your stop losses are tight. They're not going to be too far out. It just needs to be reasonable. And you can measure your target, not just with price, but also with time. Okay, so that's all nice to see. So I will just get rid of that now. After the impulse wave, it's done its ABC, comes back to a decent place at the trading hour. So we can do that. That's your Friday coming in after that Thursday dip to the downside. And then the market, as you can see, let's go forward a little bit more into that zone. All right, so that's Friday. As you can see, at the trading hours, market pushing down, another trade hour pushing up, another trade hour pushing down, trade hour breakdown, coming into the target, trading hour at the target, pushing to the upside, and it's all good. And that's your Friday from those 2 trading days. All right, so one trading day makes a big push to the upside, brings us all the way up. Thursday, market's confused. Friday, sell off into the target, and that's it. Euro dollar, let's take a look at that as well. Now with the euro dollar, I had Wednesday, and remember, we do want to come down into this zone. So you can see on the Vimeo videos as well that I do want to push it to the downside. I did say if you want to sell, you can sell. The highs, not a problem at trading hour, because it is a trading day. If I go to the 15-minute chart on this as well, you will see, let's go to Wednesday, the same kind of thing you can do with this as well, which is that Fibonacci setup, which are the lines you see here, and you'll see how nice and easy it is. This is Wednesday. Wednesday market pushes down. Now look, Wednesday market pushes down in the Asia session. The whole thing starts in Asia at the trading hour. So let's take a look at that. This is Wednesday, right? A little bit more. This is your Wednesday here, right? As you can see, Wednesday market pushes to the downside. So they start selling off. And this is your London. So from the Wednesday, selling off, trade hour, market picking up a little bit. And this is London. And this at the trade hours, you can see the market breaking down. And New York breaking down and pushing to the downside. Okay. Now, once again, check this out. This is your impulse wave. All right. Market comes up on Thursday because once you've broken down and you've closed below that swing, what you want to do is on the pullback, you can enter the trade again. So then all you have to do is wait for your zones, your price zones, like here, for example. Let's check it out. Okay. Now, as you can see on this one, the only close one here was this one to a 37.5. And then we've got the 25 zone, which is nice and easy. But we only had this, which is also 37.5. So the only place you could have sold on this one once the pullback happened at a trading hour was either the 37.5, okay, or again this zone here. All right, because that's your trading hour pushing to the downside. As you can see, it's going back to the 37.5 again, and still not going above, and then crashing again. This is Friday, mind you. All right, so that's a Friday. So once again, not a perfect match on this one. Okay, sometimes that does happen. It's not a perfect match, but it gives us confidence. Well, we've got time correlation with a price, time, price, crisscross. We can do it with a tight stop loss. If you trade in this zone, okay, if you said to yourself, well, that's the time zone, I want to sell because the bias is to the downside. Because why? Because Wednesday was a trading day and they pushed to the downside. So once they push to the downside on a pullback, I want to sell off. So once you sell off here and you've got targets down there, you can measure your risk return ratios, right? So if you put your stop loss above there, because that's what London did at the trading hours, then that's your risk. And then you've got to measure your profit, which is going to be the closing of that, somewhere around there. Actually, let me make that a straight line so that we're all honky-dory. So that's where the market closed off, right? The low. Okay, so if I draw a straight line, that's what it looks like. Okay, and then the market comes back down. If I move this into Friday, let's get rid of all of that. And I still keep the Fibonacci's open, okay, because that's the impulse wave. What the market has really done is it has gone sideways after the impulse wave, which is again fine. Then what I can do is sell it off at the trading hour if we are at a Fibonacci, all right, or if we're back at a demand supply or a trading zone, whatever you've determined according to your technical analysis. It could be a good buy kiss, it could be whatever you're trading, demand and supply, it could be, I don't know, what have you, okay, because there are a bunch of levels, there are a bunch of trading techniques and strategies out there. The ones we use at the Global Trader Club are 5 different techniques where we can measure those. So if you're using order blocks or retracements, whatever, you just need to match it to your hours, that's all. So the market again comes into the Fibonacci. We're at 61.8 now. Market pushes down at a trading hour, break down at a trading hour. We've already come to the end of the day, including the closing. If you take a look at Friday, I've marked in 10:20, which is 9:20 on the platform, to closing all the way into there, and that's your closing. Okay, let's take a look at Bitcoin. Now on this platform I don't have Bitcoin over the weekend, but because the market, we're expecting the market to push into this zone, all right, we should be breaking down. And last week in the videos as well, I said, guys, you can sell it off because on the bigger time frame we're dipping to the downside, so the price should push down. As you can see, that's a good buy kiss, pushing to the downside, and it's all honky-dory. All right, on the daily, as you can see, I've marked in that zone, but like I said, that's a Friday. So if I take a look at the trading days, just a second, Al, for Bitcoin, no, don't put your arm there, that's a screen. Okay, Thursday or Friday. Okay, Thursday or Friday. Okay, just bear with me. All right, so Thursday or Friday. So Thursday, Friday, we're looking for a trading day, and that's your Thursday, Friday, as you can see, dipping into there. Okay, so like I said, it doesn't matter what technical analysis technique you use. It's all good. If you're following the videos, then you know where we're going. All right, impulse on the weekly, market pulls back. Same thing. Look, if you did this on your Fibonacci, you'd still be doing the same thing. You're just going to measure it, right? That's your push. Market comes up. So now on this week, in fact, this is the last manipulation, right? We're at the 50. So in there, you can see the gap there, nearly closed it off, which is fine. So 2 weeks ago, if you think about it, right, this is the week of the 11th of January, right? So then you go, this is the same thing. So on the 11th of January, where would you have sold off? Right? The week of 11th of January, okay? That's your 14th of January, which, look, is a trading day. So the market comes into there. In fact, this was the video I did, remember? I think that's the video I did for that case study, Bitcoin case study, right? So it goes in there. Now got a trading day. So you see the market selling off, okay? Nice and easy from the highs into there. This one we can get rid of. And I did say if the market comes back up, you can sell off. And look, Friday, boom. Thursday, Friday coming in there. Now let me just check where Bitcoin is, because I don't have it on this platform. I'm just going to check where we're at now. Today, it's currently at 77,360. So 77,360 is where we're at, which is actually in this zone. Okay, 77,360 is all the way down there. Okay, because that ended on a Friday, you don't see that, but we're all the way down here. If I make this a little bit smaller. And also, look, once again, market impulsing, and all you have to do is just measure your trading hours. Okay, so if you put your trading hours for Thursday and Friday, because I've got Thursday, Friday, all you have to do, this is your Thursday, this is your Friday, and look, I'm expecting sudden moves in the market. I mean, that is a nice thing. Expect a sudden move into 445, and that's a Thursday. Right, so let's bring Thursday into the picture here, okay? And 445 is 345. Let's see where that is. 345. I'm just going to see that. 345. Did I get that right? So expecting a move, that's your 3 o'clock, 3:15, 30, 3:45, right? That's your 3:45, and expect a sudden move, all right? So having that expectation is like, well, that's it, you know, let's go, all right? So that kind of commentary obviously is good. Targeting 10 past 8 and then 10:35. So 10 past 8 is going to be 10 past 7 and then 9:35. So all I have to do is look into those hours, which is going to be there. That's going to be your first target right there. Okay, so the market pushes into 10 past 7 on the platform, which is 10 past 8. And then I've got 9:35 on the platform, which is going to be 10:35 my time, 9:35 on the platform, and that's going to be around there. Okay, and 10 past 7 is there. Again, the market falling off. Let's take this and put it into there. All right, as you can see, market pushing down, coming into the trading hour again, pushing down, and then we've got 9:35 should be, I think, there. All right, and that's your target. 9:45, 9:35 is there. So as you can see, having time and price on your side, knowing this in advance, expecting these sudden moves is obviously a game changer if you are writing your scenario for the day. If you have a bias to the downside, to the upside, doesn't matter. All you have to do is just match time and price over and over and over again. Let's take a look at the indices quickly. Now, this is SP 500. Let's check it out. Now, with the indices, remember, trading days. Monday, Friday. So what do I have? I've got a Monday. I did say you could push up on this one. Monday, that's your Friday pushing to the downside. Okay, so I'm just going to delete that. Put an arrow there. Why? Because if we push down, we can go back up. If we're up somewhere, we can sell off. If you watch the videos as well, I did say you can go up on this one. In fact, the best thing to trade this week, I think, was I did mention the videos as well. I think it was NASDAQ. It just made like sense because the rest of them was like quite choppy. But this is a zone where the market sold off before. So you want to be selling off here. And if Monday you bought, then obviously you've come to the target. And Friday, you don't want to be buying at the tops. We never want to be buying at the tops and selling at the lows. We could do breakouts, not a problem. But that's based on time and price and the bias in our direction. So all you have to do basically is just put in the hours I said and see how it panned out with your trading. Let's make this a little bigger. This is Friday. As you can see, very choppy, very tricky, and that's how it is. If you take a look at Dow Jones, once again, same kind of thing. With the Dow, very tricky. I did say this is dangerous. Don't muck around with this one because we're in between levels, as you can see. This was good level to buy last week, the week before, to push into there, and that's fine. But this week, just check it out. With the Dow Jones, we had Monday and Friday, and the only thing you could really do on this one is sell the highs because that's your Friday, right? This is not a good day to trade at all, and that's your Monday. So Monday, selling the highs into Tuesday, Wednesday, Thursday, Friday was like the only option, but very tricky. And as you can see, market is just like nuts. Okay, this is also very good if you know the hours to trade. So feel free to use those hours, put it on a 15-minute chart. Make sure you calculate your UTC plus 3 hours and make sure you do a correct job of timing them, because then you can see that the market will have its targets, where it moved, you know, the directions and so on according to those hours. With NASDAQ, let's take a look. We had Monday, Wednesday, Friday, and NASDAQ for me made better sense actually to go into Monday, Wednesday, and you can see Friday is just working beautifully because this was like a push to the upside. We'll come into Monday, go into Wednesday where the market made a high before in this zone, and then Friday just sell it off. It was just the logical thing to do. And once again, just feel free to just feel free to put the hours in there. If Wednesday was a high as well, look how Thursday sold off. Friday just continued to move. Impulse, pull back, sell off. And if I go into the 15-minute chart, let's do that and get over the curiosity. As you can see, let's put this into Wednesday because Wednesday was the trading day. And you'll see once again how working off a Fibonacci, just a basic tool, Fibonacci, which a lot of people complain about on the internet about not working. If you have time matching a price level, it can really work out for you. And this is, for example, there we go. This is Thursday where the market pushed down, but Wednesday was the trading day, right? So the market made the high on a Wednesday. Let's take a look at that. That's your Wednesday. Here we are, Wednesday. Trading hour on a Wednesday. This is London session. New York pre-trade session, look at that, that's your trading hour there, market pushing there, trading hour there. Now market pulls back, isn't going any higher, which is fine. Comes Thursday. Now if you traded Thursday, if you said to yourself, okay, Wednesday, trading day, Thursday I can sell off, then you look at the trading hours and on Thursday where you can sell off. Now obviously if you're selling the highs at the trading hour, you've got to wait for your setup, okay? And if the market pushed down like here, as you can see, like that's the low it did on that day. So if I bring this back a little bit, why is this important? It's actually just closing a gap here, all right? So it still looks like it's bullish, but Thursday is where they pulled the trigger. It just crashes down, and you can see those crash moments. New York pre-trade session, bang down. And remember I said expect volatility on Friday. Did I say it on Friday or Wednesday? I don't know. No, I didn't say it on that day. I said it on sudden move. So that was a Thursday. Okay, that's fine. That is a Thursday. So Thursday, I said expect sudden move. Market pushing really into there. That you can see 4:45 my time, 3:45 on the platform. Big push down. Just a second, Al. Come here. You want to say hello? No? Just a second. My son's here. And let's see. Okay, so here we are, we're back. That's the impulse, okay? It's the same thing on a Thursday. Let's get rid of those squares. Come back here. And then we can see that Thursday the market made an impulse move, coming all the way down into that 25,450 zone. And then, let's see. Okay, I'm just going to shrink this in size. That's Thursday. All right, so Wednesday, trading day, market pushes down. Monday was a trading day, market going to the up into Wednesday, making a high. Thursday, trading hours, London trading hours, New York push down. If you missed that, what could you have done on a Friday? Same thing, guys. If your bias is to the downside, then what you have to do, you missed the impulse wave. Let's say you missed it. You just take it to the place where it fell off. That's a place. If you make a mistake and say, oh, you know what, I'm just going to take that. I'm going to take the high of the day. That is also fine. Why? Because you don't have to worry about if you drew the Fibonacci exactly spot on or right or wrong. You can make mistakes. You're flexible on that because we've got time. Okay, so even if I took that, that's 37.5. If I took the impulse, let's say from there where the real crash started on the high of that, you are still okay as long as you match a line with your time. All right, so price and time. So if I go into that, all you have to do, that's Thursday. So on Friday, let's take a look. 240 to 330 on the platform, right? So this is UTC plus 3, and on the platform it's going to be 240 to 330 on a Friday. So all I have to do is mark them in. Okay, so if you also check these out, that's Thursday just before closing. So the impulse market comes back into 25, 37.5 on a Friday if you're trading. Okay, so that's trading hour, 37.5 zone, trading hour. Okay, coming down into where you're going to target, closing off that. Oops, just a second. Let's get rid of that. The closing of that, which is the red line here, as you can see anyway. Right, I like to take the closing rather than the end. When targeting. So there you go. All right, so market comes in trading hour zone, target. That's it, you're out the game. If you entered here, your stop loss needed to be above the closing of yesterday or the high of yesterday. Okay, so you just needed to measure if your risk, let's say from here, because that's the trading hour. So the bar finishes off, and let's say you traded here. That's your risk. All right, your risk is from there to there, and obviously 1 to 3 is preferable for us. If it matches, then that's how you could have done it. There's nothing really else to do here. If that's your risk there, just above the high, then you needed to target that. Okay. And time and price. Once again, impulse, Fibonacci 25, Fibonacci 37.5 at the right time, at the right time. Okay, so time and price, you match them and things should be okay with minimum risk. And that's basically all I can say on this wrap up. Like I said, check out the hours, check out the trading days, the trading hours, and see how that worked out for you. Have a good week already. Like I said, February is already up and running in the members area.